Hello and welcome to Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi. Good morning. No US session to kick off. At least, give us a bit of a fillip. So we pick up from where we left off yesterday, which is not exactly a great place.
It is not. And we actually retraced almost 1% from the day's highs yesterday. Yeah. There's no good news which is cheering the markets yet. So I guess, that just goes to show that perhaps the texture of this market has weakened a bit.
Looks like it, Sonia. The point is that we are stuck in a range, right? For the last so many sessions now, actually most of 2023, and this is the third week running, we are in a bit of a range. What is that range? The range is between 17,780 to 18,260. And the market is also quietening down a little bit, right? Last week was very volatile, very large ranges. It's just one day of the new week, but just seem like that things are quietening down. Is this the lull before the storm, or is this generally, ebbing out of the volatility all the way into the budget, and then we see the move? We'll find out. In any case, the supports are, nothing has changed. The supports are 17,774, which was the December swing low. Then we made a newer low, which was 17,761. So that broadly becomes the support. If you want to go with one number, it's about 17,780. That's the sort of line in the sand. At the day's low yesterday, that number was, that support was about 100 points away. So let's see what happens. But that's the support which has been in place for some time. Yesterday, by the way, the Nifty turned down exactly from the 20-day moving average. I only noticed this morning. 18,051 is the 20-day moving average. Yesterday's high was 1849 and point something. So we almost got to that 20-day, and then there was a sharp reversal which took place. And the 20-day at 1851 becomes, we've been highlighting that for a while now. Once we take that out, we can talk about levels of the 40 exponential day moving average, which is slightly higher, and then maybe bigger retracements, etc. But first, you need a solid close above this 20-day moving average. Yesterday, we got to it intraday, and then there was a sell-off. So as we've been saying, either a break above the 20-day or a break lower below the lower range of 17,780. I think that is what will give a clear directional indication of what the market wants to do from here. Maybe we perhaps stay in this range and then finally we get a kind of some kind of a trigger, and then one of these levels, either higher or lower, is taken out. Bank Nifty also sold off yesterday. That index ended about 0.5% lower, and this is despite PSU Bank Index being up 1.5%. So banks are also another kind of problem point, at least on the private side. On the way down for the Bank Nifty, 41,729 and 41,569 are important support levels. These are basically lows over the last 10 days or so. And on the way up, again, we go back to the 20-day as the reference point, which for the Bank Nifty comes in at 42,622. So here also, we are in a bit of a range. Within sectors, the two areas which stood out was the PSU Bank Index and the IT Index. We don't have cues from NASDAQ indicating whether, what the US may look like. PSU Banks is an interesting area. It's come back after a very steep 13-14% sell-off from the earlier high. And it's almost back there. Another couple of percentage points, we're going to be back at the highs for the PSU Bank Index. So is this the space to focus on? We'll find out. But momentum seems to be back in a range of these public sector bank names. Guys, hi, morning.
Absolutely. Morning, Prashant. Morning, Nigel. And there's some very interesting observations, right? For starters, the Nifty failed to hold on to its gains yesterday. It's failing to hold on to highs. So in that context, we are now at the lower end of the trading range. And this morning, the SGX Nifty is also indicating that the start will be very, very quiet. The flows have also thinned out in that sense. So perhaps in the run-up to the budget, there are a lot of expectations this time around as well. There's a lot of macro data coming out. So maybe it's just wait and watch mode. FI sold about 750 crores. DIs bought 685 crores. No trading from the US markets. Now, commodities continue to inch up higher. So whether it's Brent, whether it's gold, whether it's crypto, all are doing well. Crude is back at $84 a barrel. Gold is at a 9-month peak. Cryptos have been moving up as well. So equities as an asset class has moved to the back burner. But one very interesting trend that I spotted in the last couple of days is that this month, the IT index is up while the bank index is down. So the Nifty IT index is up about 2.5%, while the Nifty bank is down. So is that, that shift happening That's something very interesting. And IT, after a steep fall, is seeing a bit of a revival in the month of January. Lot of big earnings. Talking about banks, you have Bank of India today. There's IndusInd Bank tomorrow. There's ICICI Bank on Saturday. And then, of course, you have Reliance on Friday as well. So some interesting trends is what you're seeing. But by and large, the Nifty has moved to the lower end of the range. And, it's refusing to sort of react positively to good news. So let's see if there's any trigger that can take it higher.
Well, that's right. So yesterday, both the Nifty and the Nifty Bank, both of them went to the 20-day MA. The problem was we couldn't hold on to those levels. And from there, we did see, correction from the highs of the day. For me, the positive, though, yesterday was that the broader markets, that's the mid-cap and the small-cap indices, well, they were relative outperformers in yesterday's trading session. And select stocks, they did well, though the headline index was under some pressure. The cues coming from the FI as well, they are bearish. They added shorts, they bought puts, and they wrote calls. Now, those are bearish cues that are coming in there. And the short positioning now is at around 60% odd. The hope is, since we are moving closer to around the lower end of that band, they get trapped on the short side. And in fact, then we see a bit of a relief rally from around that 17,750 to around 17,800 odd. The call writing, that's a little bit worrying though, because they wrote close to around 1.5 lakh calls yesterday. And that was in a ratio of close to around 15:1. So that's aggressive call writing. At higher levels, you're expecting supply to come in there. So, even if you're working with a relief rally, it'll be a relief rally at best, 150, 200 points odd. Just take a look at that, 18,100, 18,000 call. Between them, close to 90 lakh shares getting added out there. And they were aggressive writing that was seen out there. On the downside, the 17,900 put, it has the highest open interest. So still, the hope is that 17,800 level holds out. Yesterday, though, in the final hour of trade, there was shedding that was seen because still around 230 odd, there was addition out there. Now, the PCR moves to around 1 plus, then risk reward doesn't favor the bulls. But when it moves gradually to around 0.7 odd, that's when risk reward favors the bulls. So short point is, watch for the PCR to cool off a little bit and, try to get it more closer to around the 17,800 odd mark. The 20-day MA, that's the near-term resistance zone. While in the last couple of weeks or last month or so, we have seen that you get in at around 17,750, you get in at around 41,750 on the Nifty Bank, and risk reward favors you. SGX Nifty suggesting a flattish start. Let's see, we'll get an intraday dip at some point of time. That'll be a good entry opportunity closer to around the 17,800 odd mark.
Okay, just wanted to, follow up on the IT point that we were making. The IT index I just checked is up almost 2.2% this month. And if you look at individual stocks, it's not a big move or anything, but there's still about a 2 to 5% rally you've seen across stocks. HCL Tech is up 5.5% this month. TCS is up 2.3%, TechM is up 1.7%. So question we're asking is, is the worst of the IT fall now behind us? In fact, we have a comment and equity call coming in from Gautam Dugar in just a while, and he makes that point about how perhaps it's good to nibble into the tech stocks now.
Not IT services, but IT per se in NASDAQ, etc. These are what you describe as long duration stocks, right? I mean, companies which will earn money sometime down in the future. Not Indian IT. Indian IT is extremely positive. But if there is any correlation between Indian IT services and IT product companies in the US, I mean, the big cue for them, at least, is fall in interest rates, right? Rates going up has been the big problem. And I think one thing we can say with some amount of, not complete certainty, that inflation is a big problem, is a 2022 problem. It's not a 2023 problem. And if that is the case, then, it gives a lease of life to US tech, which is in many ways very different from Indian tech. But it at least gives some amount of fillip, all right? For Indian IT, what matters is the second derivative problem of slowing inflation, which is the cooling off of the US economy. How sharp, how severe is that going to be? I think that is the imponderable. It's the point is, and I think what makes sense is, as many have pointed out in the programs here over the last couple of months, maybe Indian IT services buy into weakness. This is a very profitable, perhaps one of the most profitable parts of the market. And I think, shouldn't stay too far away, at least have some exposure at times like this. Well, before we start, let me quickly tell you what's lined up here in the first half hour of the show. We will get you updates from markets across the globe, and Ed Yardini of Yardini Research will join us to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day, and around